We look at that as a mitigating to do.
And given that order book, it's very good for you to have a big order book. It's not so good for your clients to have a big order book. How are you trying to sort of get that capacity level up? Are you able to sort of open up more sites? Are you going to be able to sell off that order book more quickly?
Yeah, we are able to open up new sites. So we are building up a site now in US, in addition to Australia, and we have already built up capacity here in Europe, and especially in Norway.
And I also understand you've been heading to Ukraine recently. You've been there over the last couple of weeks. Are you looking at doing projects there? I know a lot of defense companies are trying to get closer.
Yes, so I recently been there, and you know we talked to the authorities there, with ministers, and also with the industry in Ukraine, how we can help Ukraine building up their capacity. So with our air defense systems, we talk directly to partnerships with industry in Ukraine to build up the capacity.
And in terms of the efforts at the European level to try to get more joint procurement, try to work more collectively to get bigger orders, how is that looking? Are you seeing progress on that? Are there conversations happening there?
Yes, a lot of conversation, and I see some progress. I think it makes sense to have more collaboration, especially in Europe, more consolidation, and also maybe try to narrow down the number of systems.
And then in terms of the consolidation question, in terms of the defense industry, I mean, it's very seldom that something so big happens for an industry and there isn't much change. There hasn't been that much M&A. How do you see that progressing? Could you be an active participant in the M&A in the defense industry?
Yeah, you know, our business model is so that we have partnerships with many other companies. That's important.
Yeah.
And also M&A will be could be in our toolbox to do even more. So yes.
And when you think about that, what kinds of business do you think about expanding into? Is it more on the digital side? Obviously, you do a lot of hardware. Is it potentially something in AI and trying to appraise collecting data from the battlefield?
Yeah, you know, these emerging technologies, autonomous, artificial intelligence, and others are important for us. At the same time, if we consolidate on a number of systems, that could also be a factor in here. So everything is on the table.
And if you start to get big sort of procurement measures within the European, sort of say, much larger orders, could that put some pressure on your margins because of sort of the more sort of bartering power within the sort of larger orders?
Well, it depends, because when we are ramping up, we also have a scaling effect. So we try to keep the margin as we have today.
Okay. And then thinking about sort of how to get this industry in general bigger in Europe, right? I was looking at this sort of Euro Stock 600 defense index with twice as many companies as the American index. It's half the size in terms of market cap. How do you get this sort of growth into this industry? And your stock itself is up 700% over the last basically 5 years. Can you sustain that level of growth?
Yeah, I think so. We have stated that we will continue to grow, and I think this our company is based on a combination of civilian part, commercial side, and the defense side. And I think this needs to continue to build up the capacity and also the competence in the industry.
And about that partnership, because we've spoken a lot, I mean, I'm based in Germany, there's a lot of sort of talk about the sort of commercial industry going down and basically defense industry coming up, and they're actually defense companies scooping up full teams from the private sector in the sort of commercial side. Are you looking at that? Are you having difficulty recruiting the number of people that you need for this ramp up?
No, we think the same way, so we don't see particularly big problems in recruiting people. And this combination of civilian technology, civilian companies with the military side is good for the defense business.
And I want to talk a little bit about some of the hardware, some of the things that you're developing. Obviously, you've learned a lot about the nature of warfare in the 21st century over the last 3 years, whether it's in Ukraine, whether it's in Gaza. What are the things that you see are sort of demanded in the market? And what are the things you're working to develop for your clients in new technologies?
Yeah, there are two factors here. One is the scale up for production. That's important. We are doing that. The other one is innovation. We need to adapt to new situations all the time. So that's the key area for Kongsberg, is to build up this innovation, especially around autonomous operation, artificial intelligence, and associated areas with that.
And J.D. Vance will be speaking in just a couple hours' time. What are you trying to listen to from that speech? What are you trying to extract from that speech and try to understand about the American position that's going to most influence how you're going to conduct your business?
Well, I think it's more for us to understand how they say it, and then we need to try to understand what direction that will be, seen from my point of view.
Right. Well, Erik Lie, thank you so much, the CEO of Kongsberg Aerospace and Defense, talking about all of the issues that are sort of front and center here at the Munich Security Conference, and all waiting sort of tense with anticipation for the words of the Vice President of the United States.
Looking forward to that. We'll bring it to you a little bit later on. Ollie, thank you very much indeed. Ollie Crook joining us from the Munich Security Conference. Do you need system consolidation? Do you need corporate consolidation? Are we looking for an Airbus, a defence in Europe? Are you looking for an MBDA? that is one of the few programs that has actually worked in the missile space. Do you need more of that? We're going to talk more about that a little bit later on. We've got some great coverage coming up from the Munich Security Conference. 2:30 p.m. UK time. Francine Lacroix is going to be moderating a discussion from the event. On her panel, Ukrainian President Volodymyr Zelensky. You've got US Senator Lindsey Graham as well. There's plenty of others on that panel that you're going to want to listen to. We will bring that to you a little bit later on.
The timing of that is fantastic because so many Republican senators, Lindsey Graham, of course, standing out. At the same time that Donald Trump's talking about cutting spending, that's a Republican no-go in the United States. So we'll see how that immediate reaction is on that panel. In the meantime, you're seeing futures kind of sanguine, not super reactive at the moment, except for in Germany, where you are seeing some severe underperformance, down about 0.4%.
European markets had a really strong day yesterday. We're going into a weekend. Usually, over the last few weekends, it's definitely been risk off into the weekend. Wednesday looks like a good day. Friday's a little bit weaker. Maybe we're seeing some evidence of that kind of week in, week out seasonality. Anyway, coming up, the opening trade is almost upon us. We'll bring you the details of that next. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Friday the 14th, good morning. Couple of minutes to go until the opening trade. A lot of love in the market yesterday. Not so much this morning. Let's talk about yesterday, though, where we were getting a little ahead of ourselves. European markets surging into the close. Really solid session for European equities yesterday. And it continued after hours over in the United States. That's where we went out. That's the rally we got after the European close. That needs to be priced in this Friday morning, Critic.
Well, not seeing much action either direction this morning, Guy. We are seeing Euro Stoxx 50 futures down about 0.2%. The FTSE 100 is basically flat, but I think where you are seeing a little bit of action is going to be in Germany here. DAX futures really taking a hit, down about 0.5%. This is important because we did see that rally in German stocks earlier this week. We'll see maybe if this is just a retracement or actually some fundamental story. I should say, back from her travels, Anna Edwards, everybody.
Absolutely. Back from my travels all the way across the city. It is freezing out there, I can report. Let's get to some of the stocks that could be on the move this Friday morning. We've got NatWest certainly in focus. I was just speaking to the CEO. He was talking about being encouraged by the UK economic outlook, upgrading some of their guidance. So we'll watch how that one performs at the market open. Hermes certainly in focus. I heard you guys breaking the numbers here around an hour ago. Better than expected sales. Asia looking strong. Pricing power will be used, it seems, to counter any tariffs that might be coming for the luxury sector. So that seems to be of interest. And of course, we'll keep an eye on the defence names. We've heard from Safran this morning, their results and their guidance boosting confidence, perhaps. That's the view over at Citi. But the bigger picture around defence, we're live at the Munich Security Conference in a week where President Trump has said he wants perhaps the US, China and Russia to spend less on defence, but maybe more being spent by the Europeans, Guy.
Yeah, try and fit all that together. I think you're going to have a tough job. Let's talk about the market open Friday morning. What are we anticipating? I think probably fairly flat, but there's risk into the weekend. Do we need to price that as well? That's a factor to work our way through this opening trade. Right, here we go. FTSE 100. Absolutely flat. Yesterday, actually, the FTSE had a few laggards and it underperformed. Does that continue into the market this morning? At the moment, we are absolutely flat as a pancake. Not much to see here. The Stoxx 600, also not much to see here. The single stock story this morning, I think, is going to be where the interest lies. It is going to be names like Hermes. It is going to be some of those defence stocks. It is going to be NatWest, Safran, some of the other names that we're watching so carefully this morning. There's plenty to think about at a single stock level. I have to say, though, at an index level, it's looking pretty uninteresting. The IBEX is maybe the underperformer, down by a whopping 0.2%, Chrissy.
Well, I think right off the bat, you are seeing Hermes kind of take the cake here. It's your biggest index contributor to the upside. And I think it's really, from a sectoral perspective, paving the way for the other major movers to the upside. I'm looking at LVMH here this morning. I'm looking at Kering. I'm looking at Montclair, all seeing some green on the screen. I think that's where your leadership is when it comes to the upside and the Stoxx 600. But broadly, you are seeing more downside than upside, Anna. And I think that's where the pharmaceutical story really shows up, because your laggards here this morning, AstraZeneca, Novartis, Sanofi.
Right, yes. So that points to perhaps some concerns around that sector and where tariffs might fall next. We've heard that about reciprocal tariffs, not a great deal of detail, a lot of concern about whether, or a lot of questions about whether this will actually happen and when and how. But then on top of that, President Trump talking about specific sectors that could be in focus. I know autos was one of those. You were talking about pharmaceuticals as well. In terms of some of the individual movers then that we have this morning, of course, it's a little lighter on the corporate reporting front, aren't we, than we normally are. I do see Hermes, though. If you look at things on a points level, Hermes doing really well.
Yeah, LVMH, second best gainer. Luxury sector is definitely getting a lift this morning. Montclair also had numbers out yesterday. That's going to give us a lift in terms of that story too. So we're certainly seeing that sector absolutely front and centre. HSBC Holdings, though, is the biggest points drop on the other side. Normally you hear restructuring, job losses, and the market takes that as a positive. This morning that's not happening, which I think is interesting. So why is that being taken maybe slightly differently? Anyway, HSBC is down by 1.1%.
I'm curious what the kind of read through is. And I mean, you guys just went through the luxury picture as well, but I'll just add here, this is where the tariff story, I think, it gets really interesting, because this is a sector that is far more exposed to China, perhaps, in the Chinese story than maybe the United States story. Does the tariff piece bring it into full focus, especially as we're talking about maybe pivoting away from a Chinese consumer to an American one, if that's where the economic strength lies? Nevertheless, green on the screen across the board. You mentioned it. Montclair higher by 1.8%. Hermes is clearly your outperformer, higher by 4.8%.
But you have to have pricing power. That's the difference. LVMH, does it have pricing power? Do these other companies have? Hermes definitely has pricing power.
Yes. I mean, it's all relative, isn't it? They have pricing power versus a lot of other consumer-facing goods companies you could name. But yes, within the sector, Hermes certainly stands out as one that does. And they're talking about that this morning and saying that they'll use that pricing power to take on any tariffs if they are applied. Let's talk about the banking sector. Interesting, NatWest is down 1%. You were talking about HSBC being down. There's obviously limited read across between one and the other. One's very much more UK than the other. But NatWest is down this morning, despite I'm seeing expectations that this stock might go a little higher this morning, but it's only down 0.8%. They're talking about when the government's going to get out of this business, that by the spring seems to be the thinking. We saw the sector under quite a lot of pressure from the Barclays numbers yesterday, so there does seem to be a little bit of a rethink there. I thought it was interesting, the NatWest CEO saying they're pricing in 3 more cuts from the Bank of England this year. And obviously that's not great for banks generally, even if they are cushioned by these sort of natural hedges. But that's not great for banks generally. So maybe there's some upside there if we don't get all of those rate cuts in the UK.
I just want to flag BAE Systems, big defence contractor out of Europe. One of the few in Europe that has a really big footprint over in the United States. And I just wonder whether or not you are seeing it react to the I'm going to cut defence spending story out of Trump, rather than the Europe needs to spend more story out of Trump. Because it's interesting that it's dropping this morning. I just want to take a look at the kind of slightly longer-term picture. But I wonder whether US defence stocks may have a slightly tougher day. BA had a really good day yesterday. Maybe we're just unwinding a little bit of that. Over the last 30 days, it's still up in positive territory.
Yeah, I mean, for the sector, what the result of that equation looks like, you know, US, Russia, China down, Europe up, if that equation could ever be put together, what the result of that would look like for the overall sector is a complex one.
Especially on a day where Rheinmetall is your biggest index, or I should say mover in the DAX, and a broadly lower index. The DAX as a whole down quite significantly. So let's talk about pharma here. I think we talked about all the other sectors. We talked about pharma a little bit at the market open, because we are seeing that really the laggard this morning. Novo Nordisk, to me, is I think the sole outperformer here, higher by about 0.3%. Now, this is important here because Novo Nordisk, I think 60% of its revenue comes from the United States. So that's really where you start to see, in the context of at least the tariff conversation, the trade conversation, or even the Greenland conversation with Denmark, Novo Nordisk serves as a key purpose. The rest of the kind of healthcare, pharmaceutical stocks on the back foot this morning.
What surprises me, and I'm going to jump ahead a little bit, is that we're not seeing the same effect in the auto space. Volkswagen's actually positive this morning. I just want to double-check that it's actually open, but I think it has. You've got some losses coming through, so Stellantis is down, BMW's down, Mercedes is down, but they're not down a lot. And you would have thought that the firm focus of the Trump administration on this space maybe would cause a greater level of uncertainty. But maybe it's already priced.
Well, that's it. I mean, if you didn't know before yesterday what the tariff picture for autos is going to look like, you still don't know what the tariff picture for autos is going to look like. You know that there might be one tariff on top of another tariff, which I suppose is what you take away from yesterday listening to President Trump. Let's return to the defence sector, a real focus of our attention this week, of course. The European defence sector is on high alert as leaders and investors weigh the latest comments on Ukraine negotiations from the US administration. Let's now head to the Munich Security Conference, where Oliver Crook is standing by for us once more. Good morning, Ollie.
Yeah, and if diplomats are having a bit of a roller coaster day, so too is the defense industry. I mean, you just look at the sort of share prices across the industry over the last couple of weeks, and every time you get a comment, could there be peace in Ukraine? You see it go down. Then you say you need to be boost more spending, spend more on U.S. tech, and then again this meeting yesterday you had apparently where Trump is wanting to have potentially having the defense budgets of China, Russia, the United States. All of these things are coming into the mix right front and center here for a lot of these defense companies that need to make investment decisions on the things that they're hearing from the U.S. administration. And we're pleased to be joined by one of the people making those decisions, Michael Johansson, who is the CEO of Saab. Thank you so much for joining us here. How difficult is it right now? Even a week ago, you said it's very difficult to have any visibility on what's going on for demand. How difficult is that for you right now?
No, absolutely. I said that a week ago, and I think it's even more true today. But we still see a high demand in the market. I mean, and I think the notion now, the view that Europe has to step up and do more, statements like that have been coming all the time now from the US side. So, of course, if that is happening right now, I think many European countries will start to think about collaboration in to a larger extent and actually spending more. And that will drive demand, so to say. So, but who can tell exactly what's going to happen if Europe comes together? And
on the European side, are you very encouraged that is happening? I mean, there was a lot of rhetoric for a long time. You were a little bit skeptical when we spoke, I think, a couple of years ago. Yeah. Are you more confident now that Europeans are getting serious about this? Well, I mean, from the European Commission, it is quite clear. When von der Leyen is putting sort of defense and security really high on the agenda, we have a new defense commissioner with a really high ambition on coming together, spending more money.
identifying flagship projects like integrated air missile defense system, unmanned collaborative combat aircraft. It could be sensor technology. All of that must, of course, happen also, and it will be depending on politicians saying that, okay, let's put some eggs in that basket, the common basket, and get going on these things. But who knows? It's still a negotiation, and we have that at the same time as they are negotiating the next budget in the EU.
Yeah, and so more specifically, we're here at this event. We're going to hear from J.D. Vance in a couple of hours' time. From the people we're talking to, some officials are kind of concerned that this is going to be kind of a wrecking ball speech about basically Europe, you're on your own. What do you expect to hear from J.D. Vance? And specifically, as the CEO of Saab, what are you listening for that is going to change your perspective on what you do?
No, you're absolutely right. Of course, you're listening to how much of an own responsibility do we have to take in the European context. That's sort of what you're listening to. You're listening to the support to NATO and how important the alliance is. That's incredibly important. And also the reciprocal type of trade between European defense companies and US. Will we have an option to actually build our capability in the US, and should we have the same reciprocal setup for US companies in Europe? Those things I'm listening to, of course.
Of course, reciprocal these days is being used not to have more trade, but potentially less trade in terms of reciprocal tariffs. How is the tariff story affecting you, how you're thinking about your business?
Yeah, of course, we're monitoring that. Trade war is never good. But I would say also we are a little bit more lead time as a company, because we have a little bit more in stock, and then we have sort of regionalized our supply chains to a large extent. So we're not depending on a certain hub somewhere in the world to say, get all our stuff into building platforms. But of course, I mean, over time, this is not good.
But meanwhile, you're also looking at expanding your footprint in terms of production capacity. Where could we see new sites from Saab over the next couple of years? I know Ukraine is a site that you're looking at right now.
No, absolutely. I think we're moving from donation from countries, from us delivering into Ukraine, to setting up support and maintenance of stuff, and then finding partnerships to actually establish both development and production capability in Ukraine. We have to do that, and we have to help them build sovereign capacity going forward. That's what we're doing.
And in terms of the impact of the Trump administration, specifically on domestic economic activity in the United States, there's a lot of euphoria within the market. Could you see yourself expanding as a consequence of the Trump presidency, your footprint in the United States?
No, absolutely. We took decisions like that independently of administration last year. We're building a new facility in Michigan, Grayling.
Does it make it more attractive now?
Maybe, I would say so. U.S. is a growing market to us, and we are investing heavily to boost capacity in the U.S. And it's good because we need redundancy, and the U.S. is a big market, of course, and also great support for export.
And then in terms of trying to build capacity out in Europe and other countries, what capitals are you talking to? What countries are trying to attract you to build your next sort of production
Well,
site?
you look at your main customer countries, of course. I mean, in Europe it would be UK, of course it would be Germany, it's Poland, but also a few others. Main customer countries where we build mini Saabs, not the full portfolio, but things where we have established sort of a good customer relationship.
And you have a huge portfolio of different products. When you're looking at your portfolio, you're looking at the demand for years to come. What's missing for you right now? What are you looking at in terms of possible M&A, where you need to build out your footprint?
But as everyone else, and we think we're still an agile company, we of course embrace new technologies to make more autonomous systems. That's absolutely going to be the future, independently of domain, in the air domain, subsea domain, and surface domain at sea. And I think things like that and taking care of the critical underwater infrastructure things are really in focus for me now, to bring expertise in, to take shortcuts into that sort of market.
So what does that look like? You're talking about patrolling sort of undersea, because obviously the undersea cable is something that's a huge concern for Sweden and so you're looking at sort of autonomous drones that operate underwater?
We have autonomous and remotely operated vehicles today. We can put them being resident underwater and sort of turn them to life when they're needed to monitor something. And we can put sensor technology on them to actually see what's happening at the surface level, but also subsea. So that can be done. The question is, who is the customer? Because, I mean, these cables are owned by certain companies or countries, and it's not obviously the defense who is the customer to us. So that needs to be sorted as well.
Right. And then also another sort of factor of having all of these products and all of this, you also have huge volumes of data, and you have sort of eyes all over the battlefield. Is there a sort of, who are your partners for trying to look at analyzing that data? I'm thinking about AI. I spoke to the top general for the Germans yesterday, saying that basically if the West falls behind on AI, it could be a massive risk for the military industry and for their own defense. How do you see that, and how do you attach that? How do you attack that? How do you get the sort of AI integrated into it?
No, you're right. I mean, it's a bit sort of like islands today. Of course, we have our data centers, you would say, based on the platforms that we have with lots of sensors and the things on them. But you need to take it down another step. I mean, as countries, NATO, creating a cloud-based sort of protected environment, secure environment to share data, and that are decisions that are still need to be made in different countries around it, including Sweden. But we're getting there, I think. It will need partnerships.
And when you walk away from this conference at the end, by the end of this weekend, what do you hope to know more about and make your to inform your decisions that you're going to be making going forward?
I hope to see that it's for real, that Europe decides to step up, at least the majority of the countries, so we actually get things going on spending for common flagship projects. That would be great to hear, that we're not sort of hesitating now and having this consensus sort of way of looking at things, spreading our money over all 27 countries. We should sort of realize that we have some countries with really good defense industries that can help quickly boost capacity and capability in Europe. I mean, because we need that independently of administration in the US. We will have the Russian aggressor to our east and not being predictable for a long time. So we have to realize that. Some countries do, some countries don't.
Well, Michael Johansson, thank you so much for your time today. That is the CEO of Saab here at the Munich Security Conference, dealing with the great uncertainty that is coming, yes, from the Trump administration. Could some of that certainty, though, be coming from the Europeans? That's what he hopes to learn today here at the Munich Security Conference.
Oliver Crook there with the CEO of Saab, of course, at the Munich Security Conference. We thank you so much. Coming up on the program, we're going to stick with the corporate theme, optimism from the French telecoms giant Orange as it returns to profit in its home market. We'll be joined in the studio by the CEO next. Stick with us. This is Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back. This is the opening trade. It's Friday. It's Valentine's Day. There's red on the screen. I'm not sure if that's appropriate or not. Stocks are a little in retreat this morning, down 0.2%. The CAC 40 is actually flat, though, and that's being lifted by the luxury sector. So Hermes and the strong results at the luxury sector boosting that market. But, Chrissy, we need to go to a different sector within the French market.
Different colour as well.
No love for stocks.
Let's not argue about whether this is orange or red, because this has been going on for a long time.
That's why you have to wear purple.
This morning it's orange.
Well, let's stick with another stock here, another corporate stock. Telecoms operator Orange has forecast improved earnings growth this year after profits rebounded in France, its biggest market. The company has resisted cutting prices in its home market, positioning itself as a premium service. The CEO, I'm pleased to say, of Orange, Christel Heidemann, joins us in the studio for an exclusive interview. It's lovely to see you here in London. Thank you for coming by. Good morning. Look, these numbers were really strong yesterday, and even the analyst community had said, wow, this is kind of coming out of nowhere. What do you attribute that strength to?
Well, we've been focusing for the past 2 years on our Lead the Future plan, on execution and on, fixing some of the issues we had, but also leveraging the great assets that we have. We have fiber everywhere across Europe. We have a fantastic presence in Africa, fast-growing market. So we really operate in the European environment on next-generation network, benefiting from our fiber coverage. We are the leader in Europe. And, of course, Europeans are adopting broadband. We have cybersecurity business growing as well. So we've been benefiting from all, I would say, our top priorities, and that's the execution of our strategic plan.
Well, talk to us a little bit then about how that shows up in the context of perhaps some of your other peers based in France cutting a little bit of costs, worried about the political environment, worried about the geopolitical environment. You seem to be going against the grain in that backdrop.
Well, the solid results in France are first and foremost the result of excellent commercial performance. And our teams, our customers, we have the best NPS, we have the best network quality, we have the lowest churn on the market, and that's the key in very mature market like telecoms these days in Europe. Of course, we have the average revenue per user increasing. We're benefiting from customers migrating from copper to fiber. And there's a premium when customers buy fiber. So that's been driving growth, and that's the first and foremost priority for us. Of course, we continue to drive efficiency. Actually, we've been talking a lot about AI as well. This week, AI was everywhere.
Yes.
But in the company, we really use AI first and foremost to empower and augment our employees. And we've said it yesterday, in 2024, AI was for us 200 million euro of value across the company. And it's a mix of more revenues when we do customer value management and we optimize our footprint. And it's also, of course, cost efficiency.
Okay.
So all of that is in the results that we've announced probably yesterday.
And that all sounds like it costs a lot of money to investing in AI, investing in a lot of infrastructure, then Christel. And I wonder what pricing power businesses like yours have for various types of customers, because sometimes I feel maybe we take for granted the phone in our pocket that will work when we need it to, or business customers perhaps need their, do so as well. So what constitutes, how do you have premium pricing power in this industry?
Well, for a long time at Orange, we've been focusing on what we call convergent customers. And obviously, we have all type of offers. Our cheapest offers, and this is somehow crazy in Europe if you realize that the price of a mobile monthly package is the price of a burger these days. When you realize how essential it is for us to have connectivity, nobody can work, live, without mobile connectivity. So this is very cheap. We invest billions, actually more than 6 billion every year in our networks. I think we take it for granted. We've been doing, fiber rollout across Europe. This is like tens of billions of euros that we've been investing. So this is it. Now, it's true that we offer all type of packages. We have customers who really want the premium packages because they consume a lot of data, they travel, they want, reliable fiber. But we also have, students who need a low-cost package. So we want to offer everything. We've been doing during inflation time some price increase. But this is not mechanical anymore. So we really play on volume and value. We've been offering for customers some cybersecurity offers. This is working as well. So there's not one size-fits-all solution.
My experience of students is they tend to use their phones more than maybe we do.
Anybody else?
Is there too much competition, though, in Europe that actually we're not investing enough? This is an industry, like so many industries in Europe at the moment, there's this complaint about regulation. There's this complaint about the fact that we need scale. You talk about it in the banking sector. We've just been having a conversation about the Munich Security Conference about the fact we need consolidation within the defence space. Do we need consolidation within the mobile space, within the telco space, in order to provide the investment that Europe digitally needs right now?
We do need consolidation. Actually, Orange, we've been doing it actively.
Sure.
We've been driving consolidation nationally.
How much more do we need? How much does it need to accelerate?
You look at the European Union has said it. There's a telecom report that says we're missing 200 billion euro of investment by 2030 if we want to bring 5G and fiber to all Europeans.
And consolidation will solve that problem?
And consolidation will solve that because we are a fixed cost business. So if you're the number one in a country, you have more ability to invest than if you're the number 3 or the number 4. And in some countries, we have 5 operators. Think about it. In the US, there's only 3 mobile operators. In China, 3 mobile operators. In Europe, we have 27 countries, and we have at least 4 operators in every country.
And regardless of how many operators there are, there's a lot of infrastructure to invest in. And I know the industry, under what we called fair share rules, has been trying to argue that tech companies need to pay more because they benefit when you provide broadband to somebody's home, for example, or someone's phone. So that didn't get anywhere. But I wonder, with the AI theme growing and growing and growing, do you push for that again in the sector?
Well, it's not about, what we want as an industry is to make sure that when we invest for the network, it's us deciding to invest for our customers. The challenge that we have today is that some of the platforms and the big platforms are driving so much traffic on our networks that we are forced to investing just for them to continue to grow because their business model is based on more traffic. So that's the issue. Now with AI, we believe there's going to be a new paradigm because AI today, everyone is talking about the hyperscalers and the huge data centers. The reality is that AI, if we think about AI at scale, AI will happen on your mobile phone, in the cars, in hospitals. So it's going to happen at the edge. And the inference of AI will put some pressure on our networks. The traffic generated by AI will be very different from the video traffic. So we're convinced there's going to be
Are you already seeing it? Is there already a pickup?
No, for the time being, we don't see the impact of AI on our networks, but we want to be ready. And we want to make sure that we're building the right business model so that this time we don't miss the opportunity to capture value from AI adoption for our customers.
Nice to see you. Thanks for stopping by to come and see us. Christel Hayden, CEO of Orange. Coming up, Emirates sales are jumping. The company has pricing power. Europe is certainly seeing a luxury. It's Valentine's Day. Maybe luxury should be up today. I don't know. Apparently jewellery sales go up on a day like today. More on that next. This is Bloomberg.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's You look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of the regulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
This is the opening trade. We're about 30 minutes into today's session. Seeing some, I want to say, marginal moves. A little bit of volatility in the German index, I think, is the where to look. Down about 0.3%. It could just be a little bit of risk off ahead of the weekend, as Guy mentioned earlier. It could also simply be a rotation of what we've seen throughout the rest of the week. A string of good days for Europe, even better days for the DAX. Maybe, Guy, just a little bit of a reversal today.
Yeah, and Europe's had a really good run, as you say. Maybe a little bit of that's coming out of the market. Let me just quickly check and see what Hermes is doing this morning, because at the get-go, it was up quite strongly. We've faded that move a little bit. We're up by around 3% right now. Sales jumping almost 18% in the fourth quarter. That certainly beats most analysts' estimates. Joining us now for more on what this means for the luxury sector, and we've also had Moncler out with numbers as well, as Andrea Felsted from Bloomberg Opinion. Morning. Why does Hermes have pricing power?
Hermes is very different from anybody else in that it can basically dictate its own level of demand because it has capacity constraints. There are waiting lists for its most in-demand products, mainly the Birkin bag and the Kelly. So in tough times, it just works through that list.
Has it raised prices as aggressively as others? Does it have it more in the time? Because everything else kind of felt like it went up really, really quickly. Like, obviously, I follow this stuff very carefully. It went up very, very quickly. Did Hermes deliver that same punch in terms of the price?
No, Hermes' products are very expensive. You're looking around $10,000 for a Birkin, roughly.
Yeah.
It didn't actually push up prices as aggressively as others. Also, it's worth remembering that if you want a Birkin right now, you can't just go in a store and buy one. Yep. You have to register for interest, see whether the store gets like the model you want. Yeah, basically. Probably a bit rarer than a Rolex. But if you wanted to say, I've got to have a Birkin right now, you can go to a resale site. You will pay double in the store. So the fact that it didn't push up prices quite as aggressively as others, plus that the differential with resale means that it's probably one of the few that's still got some pricing power.
Well, talk to us about what that hit looks like in terms of the tariff story. Because guys right in that it has the extra pricing power. You're seeing the CEOs talk about the fact that they could increase their prices in response to tariffs. But can you just quantify what that tariff impact might look like on Hermes' business?
Well, I mean, we don't know what tariffs are going to be. I think Hermes is one of the few that could put prices up. Customers would wear it, literally. For many of the others, I think it's going to be very tough. If this was 5 years ago, I would be here saying luxury goods haven't got anything to worry about with tariffs. Their customers are wealthy. They can put up prices. It's going to be no issue. They have raised prices so aggressively over the past 5 years that ability to raise prices more is really not there. It's going to be a real struggle unless we have another boom to raise prices as they did before.
I mean, it's all very unpredictable, isn't it? I wonder if there are wealthy women in America getting in Trump's ear and saying, just not handbags. Just not handbags. Don't touch that. Let's talk about the China story, shall we, in the context of Hermes, because it's complex to work out what's going on in China. So the CEO, Axel Dumas, saying it's too soon to talk about a China demand recovery. But are there green shoots?
Well, Moncler actually was more upbeat about China. The feeling from the results that have come through recently is China's not getting any worse. It's not clear whether it's getting better or not. We've just had Chinese New Year, so we've got to I think, get through that to see what the underlying picture of demand is.
What do these companies do with gold prices? Do they buy forward? Do they hedge? Gold just keeps going up and up and up. Precious metals keep going up and up and up.
That is definitely an issue for them. It's something that hurt Swatch a few years ago. It has inventories that are sort of very valuable. But I guess they just have to deal with it. And if it does go up, they'll have to reflect that in the prices.
So do they have big inventories of gold, silver? Keir Giles from Chatham House. That's next. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Welcome back to the opening trade. We're 45 minutes into today's session. These feel like muted moves to me. I am starting to see some underperformance. It went from Germany to the UK. The UK is now your underperformer of the region's FTSE 100, down about 0.4%. If you're looking for a moment of optimism, though, perhaps it's in the French numbers. A lot of that driven by the luxury story. Good numbers coming out of Moncler and Hermes as well. That index higher by 0.1%. A good chunk of that, though, exposed perhaps to the United States and the tariff story. Let's go there next. The U.S. President Donald Trump has ordered his administration to consider imposing reciprocal tariffs on numerous trading partners. The development raising the prospect of a wider campaign against a global system that he complains is tilted against the United States. Bloomberg's Brendan Murray, I'm sure, has his head spinning. He heads up our trades coverage and is joining us now. Brendan, this is tricky in so many ways. The math around it is hard, but I think what stood out to me was that it's not just what countries have tariffs on the states. It's also using what he calls non-tariff barriers, things like regulation, VAT, et cetera. How do you quantify that?
Yeah, I mean, if Trump's favorite word is tariff, it seems like his second and third favorite words are taxes and regulation. So he announced yesterday a process by which his administration will investigate and review the trading relationships with all sorts of different countries. They're going to start with the ones that have the biggest trade deficit, trade surpluses with the U.S. And he's going to sit down at the table and say, okay, let's talk about tariffs, but also let's talk about these other things, these other measures that you have in place that we think disadvantage our exporters. So that just opens up a whole Pandora's box of issues, from value-added taxes to environmental regulations to food standards. It's all kind of on the table now.
Anna wants to talk about VAT. I'm going to leave that to her in just a moment. Brendan, this sounds epically convoluted and difficult. And is it going anywhere as a result of that? And the market's the consensus seemed to be yesterday, he's bitten off more than he can chew. We're not going to see this happen. Is that the right reaction?
Yeah, I think that as we've seen in just less than 4 weeks of this administration, there's a big announcement. It makes a big splash. Everybody starts to wonder what this all means, and then the process behind it takes over, and something more measured is where we end up. I think that's probably the case here. If I were the European Union this morning, they're probably waking up and going, what are we going to do now? Because they had their list of things that they could retaliate against U.S. products. But now, if all these other things are on the table, then that just changes the ball game, really. So part of Donald Trump's strategy is to kind of confuse and sow disruption, but that's by design. And so we'll see how it plays out. But if you have a big trade surplus with the U.S. today, you're going to be looking very closely at how they wind up, how this review winds up in 6 to 8 weeks.
Yeah, that's interesting. Even if you're a place that doesn't have a very big differential in terms of percentage tariffs, one versus the other, US versus your own trade. Let me ask you about VAT. As Guy said, I did go down a rabbit hole on this. So what is President Trump's what is his problem with VAT? Is it that companies that export from Europe get what you might call a VAT exemption because they're not actually selling it to a customer, it's going to a different country? Or is it something to do with the fact that European manufacturers can recover some of their input VAT costs? I mean, Brendan, have you got answers on this?
I wish I did, but I think both of those things will be part of the discussion. The Europeans will most certainly argue that a VAT is tariff neutral. It doesn't disadvantage the U.S. But this has long been an issue that Trump's advisors now, Peter Navarro, he has a commerce secretary who's coming in who's also shared these issues. That they are definitely going to sit down and debate. It's an open question as to whether this disadvantages the American companies, and so we'll see how it ends up. But they're definitely convinced themselves that they have leverage in this department.
To be fair, I'm not sure I'm a big fan of VAT either, but we'll park that one for the moment. Brendan, great stuff. Thank you very much indeed. Bloomberg's Brendan Murray.
Let's stick with themes coming out of the White House right now. The Trump administration is said to have told European allies they should buy American weapons and military equipment in order to maintain the NATO alliance. This clearly would also help the trade balance, referencing our previous conversation. Perhaps part of President Trump's transactional approach to US allies. Joining us now to discuss what we have learned about the Trump administration and its approach to defence and NATO, Keir Giles, author of Who Will Defend Europe? An Awakened Russia and a Sleeping Continent. He's also Senior Consulting Fellow of the Russia and Eurasia Programme at Chatham House. Keir, really good to have you with us on the programme, and a really serious topic that we need to dig into. So are there security arrangements that we can put in place around Ukraine in some kind of peace deal that will be effective, Keir, that don't involve US boots on the ground? Because I'm trying to find an answer to that question.
Well, yes, as you heard Brendan saying just now, you've probably got European leaders this morning scrambling and saying, what are we going to do now in the face of whatever might come out next from the White House? Now, there's long been a consensus that you do need US support as the military heavyweight to make any kind of security guarantee for the eastern frontier of Europe to actually be realistic and to stand a chance of deterring Russia. Now that has been taken off the table preemptively and a concession made to Russia, even in advance of any peace negotiations for Ukraine starting, it leaves an enormous gap in any realistic deterrent. And so, of course, the conversations now are about exactly how you can make that up. And it's not looking good in terms of the capacity of European militaries to fill that gap after they have spent 30 years drawing down their forces.
It feels like we've got a duration mismatch. Europe wants to have a bigger military presence, but in order to do that, you need to have a bigger industry to support that military presence. In the meantime, we can buy from America, but then you kind of undermine the case for long-term investment in Europe. Should we buy from the US now and invest for the future? Does that work as a plan?
It might work as a plan, especially since we're now faced with an emergency situation and countries are paying the bill for having ignored this problem for so long. It is inevitably going to be vastly more costly than if defense industry and military capacity had been maintained, or even if rearmament had stepped up a decade ago when the need was already clear. But the other aspect of this, of course, is that, ironically, the actions of the US government will have made European countries slightly more wary about buying American. And that's not just the Trump administration, it's also previously under Biden. Countries that are on the front line look at the restrictions that the United States put in place for how Ukraine could use Western-supplied and American-backed weapon systems for defending itself against Russia, and the inevitable question is, would the United States do the same to us if we, as ourselves, were under attack from Russia as well? So there are all kinds of now new caveats and new hesitancies and new factors in play about deciding where and how to purchase your weapons.
Well, Keir, what does this do, just big picture here, when it comes to the attitude towards Russia? I mean, is the United States setting a tone, basically, where it had a sticking point in other countries in that relationship with Russia? I'm thinking of India, for example. Is that tone shifting? Is it getting easier for countries, not just in Europe, but around the world, to do business with Russia because the U.S.'s mood and approach has changed?
It certainly seems that way. Now, the headlines, of course, have been about throwing Ukraine under the bus and all of these preemptive concessions to Russia, essentially meeting all of Putin's demands at the same time as negotiating over the heads of the Ukrainians. But there are broader aspects to this as well that are alarming not just Europeans, but people around the world who are next door to larger aggressive neighbors. And that's the attempt at rehabilitating Russia. It's the discussions about lifting sanctions. It's the talk about the mutual visits between Trump and Putin. If the United States plays host to an internationally wanted war criminal, that's only going to encourage more bad people around the world to assume that they too can have their day.
Can I ask you about NATO? I know we've touched on this already, Keir, but a little more, because, of course, we have Article 5 and rules about NATO are written down and members are supposed to sign up to them. But you make the point in your notes ahead of this conversation that actually NATO is as fragile as the spirit of NATO. How alive is the spirit of NATO with President Trump and J.D. Vance and everything we've learned from them so far?
That's been a startling turnaround, of course. You have the United States moving suddenly from being the core and the backbone of NATO unity and the underpinning of it to being its biggest challenge, to actually mounting direct challenges to its allies in North America. Canada now and Denmark looking at a sudden security challenge from behind the lines as opposed to looking towards the front and dealing with Russia. So it's thrown a huge question mark over exactly what the commitment of the United States as that core, as that strongest member of NATO, would in fact be if it were tested. And that's when you look at the Article 5 of North Atlantic Treaty that you mentioned, the idea that an attack against one member is an attack against all, but you have to read to the end of that and understand that in order to meet its obligations under that treaty, the United States doesn't actually have to do anything at all. It can deem it not necessary.
Keir, let's talk about the kind of the nuts and bolts of how Europe rearms. Do we need an Airbus of defence? Do we need system consolidation or do we need corporate consolidation? Is MBDA the right model? And how do you solve the labour problem as well? It is hard to recruit soldiers, sailors, airmen right now into European armed forces. Just walk me through the mechanics of getting this all done.
Now, let me stress absolutely, I'm not a defense industry expert. I can see the gaps in the armed forces. Filling them is not my area. But what we can see is that over the last 2 decades, we've had calls for precisely this kind of response to the gaps that are in European defense capacity. And there has been alarm across so many different countries about the way core industries like steel, like explosives, everything that you need to actually supply a military have been eroded one by one. So there is so little capacity across the continent and dependence on countries overseas, which may not necessarily be friendly disposed towards Europe in a time of a crisis. So all of that needs rebuilding on a very, very fundamental level in advance to the any grand plans for international international cooperation there may be, it's got to be part of a comprehensive package of rebuilding things that have been steadily demolished over the last 3 decades.
Keir Giles, plenty of things to digest with you. We thank you so much for your time this morning. Senior Consulting Fellow of the Russia and Eurasia Program over at Chatham House. Plenty to watch ahead in terms of the trading agenda. And your day book today, you've got 10 a.m. UK time, Euro area GDP, 1:30 p.m. UK time, the focus on the States, U.S. retail sales, followed out about 45 minutes later by industrial production, and then some comments out of the Fed's Lori Logan later. But I think the highlight is that it's Valentine's Day.
Yeah.
But it's also retail sales.
There we
so
go.
America
There's your link.
spending a lot on... the numbers are quite staggering. Like, I don't have them to my fingertips because I'm not paying that much attention. But I understand that there will be people out there
Frankly,
spending money today.
you don't care that much how much Americans spend on jewellery.
I bought a card.
Well, that's
as far as we go.
That is
Well
excellent. And there's still time to buy the chocolates on the way home, I'd just say. Yes, there is. I mean, what have we got on our list then? There's plenty. Oh, there were some cultural
Film festivals.
activities.
There's very little sport this weekend.
Little sport. White Lotus is out, apparently. Although Bridget Jones, that new movie, seems a little more romantic and Valentine's-y to me than White Lotus.
The Berlin International Film Festival. Come on, guys. Huge. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live from the Munich Security Conference today. These are your top stories. The future of Ukraine hangs in the balance here in Munich as European leaders consider their role in negotiations after Donald Trump's phone call to Vladimir Putin. A 50% cut in defense spending. Donald Trump floats the idea of a deal with Russia and China as a way to radically reduce military budgets. Plus, signs of tariff fatigue while Bloomberg's dollar index actually slides to a 2-month low as investors wind back bets that President Trump will ramp up levies. Well, we have a really packed show. We have a host of top guests this hour, including the Singaporean Defense Minister, the EU's Economy Commissioner, Valdis Dombrovskis, and then, of course, a little bit later on, we also have a great panel here at the Munich Security Conference on the future of the U.S.-Ukraine security cooperation with the Ukrainian President Volodymyr Zelensky and U.S. senators, including Lindsey Graham, Jen Shaheen, and John Cornyn. So there's quite a lot going on here in Munich. Donald Trump setting the wheels in motion for peace talks between Russia and Ukraine, starting with his call with Vladimir Putin. This, of course, has left European officials feeling blindsided, with concerns being raised about their ability to shoulder the cost of supporting Kyiv through negotiations and rebuilding Ukraine's military. Well, I'm delighted to be joined by Anya Manuel, former diplomat and executive director now of the Aspen Security Forum. Anya, as always, thank you so much for trying to make us smarter on all of the diplomacy that's going on behind the scenes. Do you worry? Is this a historic moment for cooperation between the U.S. and Europe?
This is a historic moment. It may not be cooperative immediately, but I do think you need to, everyone should take a step back here at the Munich Security Conference, and instead of focusing on the minute-by-minute headlines coming out of Washington, and I understand there are a lot of them, focus on the trends that are consistent. And I'd give you 3 important ones. One, from previous presidents to Biden to now President Trump, there has been a call by Americans to say our allies must do more. We cannot do these long, faraway wars by ourselves. The American people are sick of it. We're going to need the allies to step up. That's okay. Trump may say it less diplomatically, but it's a trend that continues. So that's one. 2, our southern border needs to be secure. Immigration has really become an issue. It's now a bipartisan issue. So to the extent that you hear the president talk about immigration issues, those things are going to be ongoing. And 3, I know there's a lot of talk about Russia here. China is front of mind for a lot of people in foreign policy circles in the United States, and continues to be a bipartisan, fairly hawkish consensus on China. There's real worries that under Xi Jinping, China has become increasingly authoritarian, increasingly pushing out of its boundaries in a way that worries all of us.
And there's very clear anxiousness amongst European leaders that actually the U.S. with Russia will redraw the map. And this is being zoned in on when it comes to Ukraine. We're seeing conflicting messages, frankly, from the Trump administration, depending on who you speak to. Does it take time for real policy to come through? Like, how do you cut through the noise?
Yeah, every administration, the beginnings of an administration are really complicated. No one is in their seats yet. There are a lot of really good people that are going into the Trump foreign policy establishment. Marco Rubio, head of CIA, Mike Waltz, who's running the National Security Council, Keith Kellogg, who's here leading on Ukraine. Those are really good, smart, seasoned people, very thoughtful. The president is someone who likes to make big announcements and then see if a deal can get done. So I think you're seeing here a lot of announcements being made, but behind the scenes, I think you'll see some more careful and thoughtful diplomacy.
We're also expecting at 2 p.m. the speech by J.D. Vance. It's very difficult to know what's in it. But again, there's a murmur in the corridors at the Munich Security Conference that it will be more like a wrecking ball. Can Europe and NATO still count on the U.S. as a key ally?
Of course you can count on the United States as a key ally, but alliances are a real partnership. And I think president after president has said, look, we're spending 3.5% of our GDP on military European countries. We've gotten more countries to 2%, but boy, we're not quite where we need to be. So the Trump administration will say it more aggressively than maybe a previous administration would have. But the sense remains the same, that if it's going to be an alliance and a partnership, it needs to be a true partnership.
I know you spend a lot of time trying to understand China's thinking in all of this. How are they looking at this conversation between Russia and the U.S.? How are they looking at Ukraine and the Middle East?
Well, I wouldn't want to speak for the Chinese. They're here. I'm sure you'll be interviewing them. When Chinese officials have spoken to me in the last few weeks, trying to figure out how to approach this new administration, I have said what I would say here, which is help us. You know, there doesn't need to be a war in Ukraine that's killing hundreds of thousands of people. China is a big power on the world stage. They can use that power for good. And if they can use their good offices behind the scenes to get a lasting, sustainable peace that's right for the Ukrainian people, then that's a good thing.
You know what I feel is very different from other administrations is that between the deal